Hello friends. Indian equities in August reflected a dual narrative of external pressures and supportive domestic conditions. The imposition of steep US tariffs on Indian exports created near-term volatility, though upcoming negotiations will be key in determining the broader impact. The direct impact on BSE 500 companies' earnings is limited to below 3% of revenues. Against this backdrop, the Indian economy enters FY26 on a stronger footing than the previous year, with growth momentum supported by a combination of fiscal stimulus, accommodative monetary conditions, and rising government capital expenditure. Policy actions are clearly demand-oriented, with GST cut expected to boost consumption. Alongside this, the implementation of the 8th Pay Commission wage revisions and income tax relief measures could likely translate into a sizable consumption stimulus of nearly 2% of GDP, with the potential to generate multiplier effects across sectors. Adding further, a normal monsoon strengthens the already improving rural economic outlook. Inflation remains benign and crude prices stable, reinforcing macro stability and leaving room for policy continuity. On the investment side, government focus on infrastructure, power and renewables ensure that the government capex cycle stays intact. However, the private capex cycle pickup still remains elusive. Taken together, these drivers highlight India's resilience, positioning it as one of the most robust growth stories among emerging markets despite external uncertainties. The global economy entered August 2025 on a cautious note, shaped by July's key developments. Weakening US labor market signals have increased expectation of a Fed rate cut in September, though no move have yet been made, keeping financial conditions tight. FPIs have turned sellers in July and August on account of US tariff concerns. Flows are showing signs of stabilization, with expectations of a reversal in coming months as domestic cyclical recovery takes shape. Valuations in large caps are now more reasonable, while corrections have made select mid caps and small cap names attractive. Corporate earnings are expected to pick up as cyclical recovery takes shape in the economy. The earning upgrade cycle should be led by consumer durables, consumer staples, and late cycle real estate plays. Our portfolio positioning tilts towards domestic cyclicals and high quality companies with minimal export dependence and strong earning visibility, offering resilience amid volatility and global uncertainties. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.